Hi, my name's Charles Annis. I'm in charge of display manufacturing research at IHS Markit, and today I'd like to talk about some of the current trends in display technology manufacturing as well as the market. So the first point that I'd like to emphasize is the sort of super cycle that the industry is going through in terms of new factory investments, which is driving this unprecedented opportunity in display equipment, which is really quite amazing considering that this market is up and down on an annual basis. But not only is the current opportunity 30% larger than all previous years, it's also occurring over a sustained 3-year period. And that's really being driven by 2 or 3 sort of market factors. And those include this fundamental shift in display manufacturing away from Korea and Taiwan towards China. And a lot of the new factories being built in China are the largest, newest, most expensive, Gen 8, 8.6, and most importantly, this very large, ultra large glass size of Gen 10.5 and 11. And the other main trend is this shift in mobile display technology away from LCDs towards OLEDs. And OLED factories are also very expensive and require lots of different types of machines that are very high performance. And so that is helping to push this super cycle. And adding further fuel to the fire is the fact that panel manufacturers are actually quite profitable right now, which makes it easier for them to promote these new factories, to get support from local governments in China as a real long-term business opportunity. So this equipment cycle is not only a great opportunity for equipment makers, but it's also affecting the entire industry for materials, for financing, for every really sort of aspect of how displays are made and what it means for the end market. So with that in mind, I'd like to talk about some of the, first of all, the key market trends, and then later talk about some of the key technologies. First of all, let's look at recent panel maker operating profits. So panel manufacturers have actually been on a pretty good run for the last 4 or 5 years now, and have been mainly profitable since 2012. But these profits have been quite limited, between 2 and 5%. And then in the second half of 2015 and the first half of 2016, profitability declined quite significantly as prices fell. But starting from the middle of last year, prices started to rebound as the market sort of had overreacted from the low prices in the earlier part of the year, and panel manufacturers had decided to shut down factories, most notably in Korea, Samsung's L7-1 factory, much of their Gen 5 capacity, and also at their competitor LG, who also shut down many of its legacy fabs and is still in the process of doing so. And that has helped the market to recover. At the same time, panel prices, having fallen, enabled consumers to shift to larger sizes. And so we've seen this very rapid growth in average television size that has really helped drive profitability for panel makers. And if we try and extend that sort of outlook for profitability through the rest of 2015, you can see, 2017, you can see on this graph how we've modeled large area profit margins for the rest of the year. And actually, we're still showing quite a positive outlook for the rest of this year. And the way that we model these profit margins is by looking at price forecasts and how that changes over time, combined with factory utilization estimates and how much costs will decline over the same period. And this is a really difficult thing to do in terms of trying to estimate how quickly prices will change. And we've shown here both a typical scenario and a lower price scenario. But in either case, we assume that profitability will last for this year and be well above 5% at least. And that's really a pretty good outlook considering how high profits have come so far. And so panel manufacturers are really still quite encouraged by the outlook for the rest of this year. If we look at the supply-demand situation, this graph shows that the glut level, or how much supply exceeds demand, is really quite tight through the second half of next year. And in our model, a 10% glut is considered a balanced market, which equates to about 90% factory utilization. And over time, capacity goes up, but it really can't change very rapidly because it takes a couple years to build these factories and ramp them up. But demand, on the other hand, can actually move quite quickly and is a kind of swing factor. And as you can see here, we're showing that demand will remain robust through this year, but we have to be careful to watch for sudden inflections. And the biggest concern is that as demand has been strong and supply has been tight, we've seen prices for panels rise this incredible amount over the past 9 months. And the risk with that is that it will cause set makers to raise the price of television sets, and that will stifle demand, and that will cause demand to fall and panel makers to sell off their inventory, set makers to sell off their inventory, and prices to fall rapidly. And this scenario has happened in the past, so it's something that we have to be vigilant about. But the flip side is that capacity is still quite limited this year, and so that is expected to keep the market relatively healthy no matter what happens. So this next slide, I want to look at the fab investment schedules that we're forecasting specifically for these Gen 10.5 11 factories being built in Korea, but mainly in China. And these factories are very large. They can produce a huge number of very large size panels. They're really targeting 65 and 75 inch sort of premium panels, but they can also make a lot of smaller panels at the same time. And these factories are very expensive. They cost $6, $7, $8 billion to build one, depending on the size of the factory. And they've become very politicized because to get that sort of financing, particularly in China, companies are relying on support, joint ventures, or getting sort of incentives from the local government. So what sort of deal is made with the local government is really important for these factories to happen. So right now, BOE is well on their way to building their Gen 10.5 factory. They should be moving in machines shortly, and production will begin early next year. And China Star has also ordered equipment and is about a year behind BOE in terms of when they're moving their machines in and how fast they'll wrap their factory. We also think that Sharp and Foxconn are very likely to build a factory in Guangzhou. And then in Korea, LG is very close to making a final decision on its P10 factory. That's also Gen 10.5. And then there's a bunch of other companies, including HKC, that are working hard to find a local sponsor in China. We think that there's still a possibility that they could move forward with a Gen 10 factory, depending on what sort of support they can get. And then there's also discussions of BOE building a second factory, and of all the panel manufacturers, they're probably the most likely to be able to pull that off, considering their sort of political connections and their history in making factories. And then there's discussions about building factories in the U.S. and other locations as well. And you can see in this forecast here that building all these factories would take a very long time, and we don't think that all these will actually get built. And you can see this column here that shows a percentage, and that's our estimate of the likelihood that these factories will come to fruition. And anything that's above 30% we're counting in our forecast, and anything below 30% we do not count in our official supply forecast or equipment forecast. But how fast these factories can be built is also a really important point. These manufacturers like Sharp and LG, they're sort of racing to get these factories up and running as fast as they can in order to just take advantage of this premium 65-inch panel market. It still has reasonable profitability, but they can only get built so fast because the supply chain is limited. First of all, building a glass factory for these factories is really important. These glass substrates are huge, and the panel manufacturers want to have their factories on site, but they can't always do that because of environmental concerns, and also they don't make the glass themselves. They have to rely on companies like Corning or AGC to build these factories for them or with them. So they need to reach an agreement, and the agreement takes a while to make, and then it takes 3 to 6 months to get approval from the government, and then it takes 1.5 years maybe to build and wrap the factory. So that's at least a 2-year cycle, and maybe longer. And at the same time, there is equipment that needs to be purchased and delivered to these factories, and that is also quite a long cycle. And the problem is that these equipment makers are relatively small companies, and they have limited capacity. They can only make a couple of these very large machines a month, and so one bottleneck is the lithography tools. Nikon is currently the only company making Gen 10.511 machines, and their capacity is limited to maybe 20 to 24 machines a year. And so now it's really unclear who's going to order these machines first, who's going to get them delivered first, and when they'll be able to start these factories up. So the supply chain is really an important part of these schedules. So this next slide shows the long-range supply-demand forecast. And first of all, the graph that shows the growth rates for demand versus capacity shows that in 2017, capacity is only growing by 1%, but demand is growing by 7%. And the reason the capacity is not growing very much this year is because, as I mentioned, there's lots of factories being shut down currently, but also all these new factories being built in China don't really start to come online till later this year and really start to ramp into full production next year. But going out in the future, we can see that as these factories come online, that capacity starts to grow at a much faster rate and significantly outpaces our forecast for demand growth. And that creates a scenario shown in this large area supply-demand graph here, where from 2019, the capacity swells well above demand and creates a very large glut, and that will likely have some very significant effects on the industry, most notably causing prices to crash again, and probably causing panel makers in Taiwan and also in Korea to consider shuttering their legacy capacity that is older and just can't compete with all the newer factories. So moving on to the next section, let's talk a little bit about some of the key manufacturing technology issues. And the first thing I wanted to discuss was something called MMG, or multi-module glass, where panel manufacturers make multiple different panel sizes on a single substrate. And this technology has been around for many years, but hasn't really been used all that commonly because it does create some inefficiencies. But recently it has become a really important way that panel manufacturers can produce sort of high-end 65-inch panels on Gen 8 substrates. So most of the television capacity in the world is Gen 8, but it's not very well suited for making 65-inch displays. It was designed for 55-inch displays. So when you make 65-inch panels on them, you end up with a bunch of wasted glass. You only use about 2/3 of the substrate. And so that's very costly to panel manufacturers to have to throw that away. But if they can put multiple other sizes, like 32-inch, where you can fit 6 32-inch panels on the substrate along with 3 65-inch panels, you end up being able to use almost the entire substrate. So there's been a lot of interest in this recently. You can see in this table here that already multiple manufacturers are adopting this technology, but the trade-off is that it reduces productivity because you need to make more lithography shots for every panel you make, and then particularly for 65-inch panels, the mask size isn't big enough to make a single 65-inch panel with one shot. So they end up stitching 3 shots together, and they do that 3 times for the 65-inch panels and then 6 times for the 32-inch panels. You end up with 15 shots, and that causes the throughput to basically be cut in half, and it's very unproductive. So that's the negative of this technology. So recently, there's been a lot of interest in adopting a solution to that. We're calling that hybrid lithography, where panel manufacturers are actually using 2 exposure machines for every coder developer line. And what they are planning on doing, first with color filter, and then we also expect this to be adopted in TFT probably from next year, is use what's called a long mask, an extra large size mask that can expose one 65-inch panel in a single shot. And so they will use one machine to do the 65-inch exposure. Then they will rotate the glass 90 degrees and probably put up 2 50-inch panels on the same substrate, and end up using almost all the glass, have 2 premium size televisions, and they'll be able to maintain line tact and productivity of about 1 minute. But the downside of this approach is that you have to buy 2 exposure machines, and that adds significantly to the initial investment cost. But we do expect that this will come to the market probably in 2018. The next piece of equipment I want to talk about is evaporation, and this is specific to the manufacture of OLEDs, and it's this really key equipment that's used to deposit the organic layers for RGB and also common layers, and it is a very large and complicated machine. You can see in this graphic here, it's a bunch of cluster tools linked together in a long line that's about 100 meters long, and one of these machines is very expensive, costing well over $100 million, and it has throughput of about 30,000 half Gen 6 substrates per month. And this machine is really creating a very large opportunity for some equipment companies. And on this graph here, I show the market share for the leading evaporator makers. And you can see that Canon Toki is by far the most dominant company in this area. Canon Toki, and previously Toki before they were acquired by Canon, has been making evaporators for this application for many, many years, and has more experience than almost any of the other companies that are still remaining in this area. And they've become Samsung's preferred equipment vendor. And so not only are they benefiting from all the investment that Samsung has made in their OLED factories from A1, A2, now in A3, and in the future A4, but it's also made them a highly desirable partner for all the new Chinese manufacturers who want to get into this market, who want to replicate both Samsung's process and their success. So Toki has really benefited from that, but they can't supply the entire market. With the help of Canon, they've dramatically increased their capacity from just 4 machines or so a few years ago to 10 or even more this year. And so they are also supplying machines to other companies like LG and BOE and a couple other of their partners, but there is also room for these other companies, mainly Korean companies, and a few other newer players that are also in this area. So next, the machine that is used in conjunction with the evaporation machines right after the materials are evaporated is the thin film equipment, TFE. And so these machines are also sort of a combination of cluster tools of CVD machines, which are used to deposit silicon nitride inorganic barrier layer, and then that's covered by an organic polymer layer. And the preferred method to do this has become to use inkjet, industrial inkjet printers to deposit this material, and then that's covered again in a silicon nitride layer to create this sort of impermeable barrier to, impenetrable barrier to oxygen and water contamination, which is has very negative effects to OLED materials. And so these machines are also very large. This one here is 60 meters, and they're also very expensive. And so that's also driving a very large equipment opportunity for companies that play in that segment. And so on this next slide, you can see we forecast the OLED market opportunity for equipment in terms of the process type for the TFT equipment, and then for the front plane equipment for depot, which is almost exclusively evaporation, and then NCAP, which is mainly TFE or thin film encapsulation. And you can see that these markets are about similar in size, and the depot or the evaporation market in particular is very large, about $2.2 billion this year, and that's a huge increase from just a couple years ago, where the market was a couple $100 million in size. And also, thin film encapsulation is going to be about $1.3 billion this year. And so these markets are rivaling some of their other markets in TFT, such as lithography, and creating great opportunities for companies that have technology in these areas. Okay, to wrap things up, first of all, I want to show this slide where we forecast a very long-term demand and supply going out to 2032. And of course, making this very long-range 15-year forecast is fraught with danger of being wrong. A lot of things can happen over such a long period. There could be technology shifts, all sorts of things could happen in the market. But the point I wanted to make is that the display industry is really vital to the world we live in. And even though we're going through this huge cycle now, and we expect a down cycle to follow in the future, displays are really fundamental. And as population grows and developing regions use more and more and larger displays, the market will still need to expand, and capacity will still need to be added, and new technologies will grow. So we expect that LCD, although it still has quite a future, probably won't grow at very high rates. OLED will, and will continuously gain share in the future. And then finally, I just wanted to show this weather forecast of the sort of metrics that we use to track the display industry. And you can see over the period from 2016 through 2018, we're showing particularly this year as having an overall very bright forecast. Actually, I can hardly remember, I can never remember a time when so many segments of the display industry have been doing so well. And of course, we have to be careful to watch prices and demand, because high prices do have the opposite effect of causing demand to be restricted. And so we'll be looking at that, particularly in the second half of this year. But for now, things are looking pretty good, and we can look forward to that probably for another year or so. So with that, I'd like to end my presentation. Thank you very much.